I think more than 100 people have registered.
Oh,
But,
great, sir.
after
Great, great. Almost most of the people have joined. In the meantime, they are joining. We can start the session, sir.
Yes, sir. Yes.
Respected members of our Chandigarh branch and guests, a very good morning to all of you. I CA Saurabh Goel, Treasurer, Chandigarh branch. On the outset of today's program of virtual workshop on USA business expansion opportunities, USA company formation and tax implications, give a very warm welcome to all our members on behalf of Chandigarh branch of NIRC of ICA. I also welcome CA Mohit Kaplaji, my old friend from KPMG, along with all the executive committee members of our Chandigarh branch. We all know, earlier in COVID-19, time had been very challenging with all of us. But with the arrival of this festive season of Diwali, we hope that those hard times are permanently gone now, and we are trying to make the best out of it by keeping this best knowledge sharing session for our young members through use of this digital technology media from time to time. This time, with the support of our chairman, sir, Upkar sir, we have a very young speaker with us, Akhil Bansal, who is a professionally qualified US CPA. CPA Akhil Bansal is a US certified public accountant and an active member of American Institute of Certified Public Accountants. Akhil has a wealth of experience in international taxation, corporate tax planning, taxation of high net worth individual, non-resident and immigrants. He has previously worked with PricewaterhouseCoopers in Boston and Los Angeles office. He has recently moved to India and is running his own US tax and accounting practice from India. He is currently helping Indian citizens and Indian residents to expand their business in the US by helping them from US entities from India and navigating them through US tax laws and compliances. So we look forward for your session, Akhil. About this today's conference, International Tax Conference. It will help our members with their Indian clients who are engaged in the export of goods and exports of services from India to the US and vice versa. And we would also have a focus on how our members clients can open and run a US company from India, open a US corporate bank account from India, get a US business address from India, advertise their services as a US company, and understand what are the tax and legal compliances from both the US and Indian perspective. So let's start our program now. Starting with, I would request CEO Kar sir, our chairman Chandigarh branch, for his welcome address. Kar sir.
Thank you, sir. Thank you so much. Respected members, a very good afternoon to all of you. I, on behalf of Chandigarh branch of NIRC of ICAI, welcome you all on today's CPE meeting on USA business expansion opportunities, US company formation, and tax implications, US-India. I also welcome speaker of the session, CPA Nikhil Bansal, to take initiative to speak on the topic, which will give definitely opportunity to our chartered accountants in US. Help me and my team in making the difference. I am votary of partnership leadership, as it makes a community to discover hidden assets that can eventually help it grow. It also helps every member to have an opportunity for him or her to expert their skills so that every member can contribute to the development of this community. You are also welcome to come forward with your suggestions to fulfill your dreams and be a part of our speakers team. Choose a topic in which you are expert and share your expertise with all of us in making CA as the most sought after profession in the country. I again request you to write some articles for the branch e-newsletter so it can be published. At the end, I thank you all for attending this virtual CPE meeting. मुझे पतझड़ की कहानियां सुनाकर उदास ना करे जिंदगी. मुझे पतझड़ की कहानियां सुनाकर उदास ना करे जिंदगी. नए मौसम का पता बता, जो गुजर गया सो गुजर गया. नए मौसम का पता बता, जो गुजर गया सो गुजर गया. तो कोविड अब दोस्तों चला गया है, तो हम अब दीपावली भी आ गई है, तो आप सभी को दीपावली की बहुत बहुत शुभकामनाएं. होपिंग योर दिवाली ब्रिंग्स हेल्थ, वेल्थ एंड हैप्पीनेस. एंड शायद कोविड के बाद एक बहुत अच्छी दिवाली आप सबको होने वाली है. शायद पटाखे तो शायद नहीं चलेंगे, लेकिन खुशियां बहुत सारी मिलेंगी आप सबको. तो मेरी यही तमन्ना रहती है कि हमारे मेंबर्स, हमारे फ्रेंड्स हमेशा खुश रहे, हंसते खेलते रहे। थैंक यू ऑल। जय हिंद, जय आईसीआई।
थैंक यू सो मच उपकार सर, आपने बिल्कुल सही कहा कि कोविड के बाद जो है फेस्टिवल सीजन अब दिवाली का आया है। वी होप दैट इन दिस फेस्टिव टाइम्स दोज ओल्ड चैलेंजिंग टाइम्स आर गॉन फॉर एवर। सो
यस,
और अच्छा ही रहेगा आगे भी।
यस सर
And
जी।
with this, we would like to request Akhil Bansal ji. So, sir, Akhil ji, we feel proud and we welcome you for the session. And we request you to start the deliberations for the topic today. Over to you, Akhil ji.
Amazing, amazing. Thank you so much, Sauravji. Thank you so much, Upkarji, for such a beautiful introduction and for your address. I really want to thank you all for giving me this opportunity. Chairman Sir, Mohit ji, other executive members of the committee. It's been a pleasure to it's a pleasure to be here, and just wanted to I'll quickly share my screen, and then we'll dive right into the presentation, and we'll do a question answer session in the end for people who have just joined. Just write down your questions, maybe in the chat, or maybe after the session we'll discuss all of your questions in the end. And it'll be helpful if you want to contribute even after the presentation, if you have any points from like international tax experience from India. So yeah, at this point, I'll quickly just share my screen, and we'll dive right into the presentation. Sounds good? All right, thank you. All right. Hello, everyone. I'm Akhil Bansal. I'm a US certified public accountant. I'm the speaker for today. And our topic for discussion today is USA business expansion opportunities and the tax implications. So first of all, I really want to thank you all for being here, for taking time out of your personal and professional lives to attend this webinar. And I also want to thank you for giving me this opportunity to present before you. So today we are primarily going to discuss everything about how to expand business into the US market, what the company formation process looks like, what are the tax implications from both the US side and the Indian side. And yeah, I mean, you might already have some clients or people who are doing transactions abroad in the US, or they want to expand their business into the US market. So a lot of this information is going to be useful to you. And yeah, let's dive right into it. So I'm going to quickly introduce myself. I am Akhil Bansal. I'm a US certified public accountant. I'm licensed from California. I did my bachelor's and master's in accounting and taxation from Northeastern University in Boston. And yeah, during that time, I was working with PwC, PricewaterhouseCoopers. It's one of the big four accounting firms. And I worked with them in the Boston office. So I was working in the individual taxation field and also the corporate taxation field. And after I graduated, I moved to California, Los Angeles, and I worked with PwC there in the international tax field. So very recently, I have started my own US tax and accounting practice. So I left my job at PwC LA. I have recently moved back to India. And now I'm running my US tax and accounting practice from India. I am actually trying to help Indian businesses. So anyone who's basically doing Indian export of goods and export of services from India into the US market, I'm actually trying to help them grow their business by guiding them through the US tax laws and other compliances. So yeah, that's basically what I'm doing. And I have lived in the US for more than 6 years now. And having lived there, I understand what the culture is like and how easy it is to do business there. And this is something that I wanted to communicate to you all. And hopefully this content in this presentation is going to be helpful to you. And yeah, our agenda for today, we're gonna discuss a case study first. So just because it'll be easier for us to remember the facts when we discuss like other situations during the presentation, we can always tie it back to that case study. So we'll cover a quick little case study in the beginning, and then we'll discuss how people can expand into the US market, what the US entity structures look like, what the US and Indian tax rules are like, and yeah, and then in the end we will do the question and answer discussion session. So let's dive right into the case study then. So our case study for today, we have a guy called Adi. He is an Indian citizen and an Indian resident, just like all of us. He lives in India. He resides in India. He is doing business in India. So he is running an IT services business from India, and he's doing really well. And very recently, he's starting to expand his business, and now he's starting to get calls from US clients. So now this is the first time he's going to be, engaging in a foreign transaction or with foreign customers. So he's going to start providing services to US customers, but he is still going to be based out of India. So he's going to provide services from India. And now, the US clients are basically approaching him, and now he wants to basically expand his services in the US market. So right now, this is what the structure looks like. Adi, who is an Indian citizen and an Indian resident, he's running a sole proprietorship, IT consulting service business. If you want to think about like other service clients, there's tuition, education services, web designing services, everything, all of that, consulting services, even our bookkeeping and accounting services, all of that falls under the services umbrella. So Adi is a guy who's providing these services, and let's say he's doing IT consulting services. So right now he was doing everything in India, and now, as you can see in the structure, he's going to provide services to the US, like from his existing Indian sole proprietorship. So there are a couple of concerns. There are a couple of things that he needs to be mindful of when he's going to start engaging in transactions with US customers. There are a couple of problems that Adi's going to face. One of the biggest problems that he's going to face is the transaction fees and the wire transfers. So for example, whenever someone from the US needs to pay Adi some money, if they wire transfer him the money every single time, Adi's going to incur wire fees, exchange fees, conversion fees. Banks have their own rates. So there's going to be tons of different fees associated with these foreign transactions. And with one customer, that's absolutely fine. But now that Adi is planning to grow his business and have more customers in the US, just imagine once he builds a huge client base in the US. Now, if he has like 500 clients in the US, imagine all of those fees, they'll rack up, and all of those fees, they will amount to a huge sum of money, and it could be exponential, and yeah, so that's wire transfer fees is one of the biggest concerns for him. One of the other things that he's going to face problems with is it gets really inconvenient for the US customers to pay him, just because the US customers do not have a US bank account. Adi doesn't have a US bank account. It's going to make it harder for the US customers to pay him. Asking a US customer to wire transfer him the money every single time is really inconvenient, because the customer will have to go to a US bank account, wire transfer him the money. Say in India today, for example, I take any services from you, it'll be so much easier for you to just tell me that, hey, Akhil, can you just Paytm or Google pay me that money? You're able to do that because you have an Indian entity, you have an Indian bank account, and you've connected your Indian payment gateways to your Indian bank account. So that's how easy it should be, even for Adi to collect payments from his US customers. So by not having a US bank account, this is something that he's missing out. He won't be able to connect to US payment gateways, and he won't be able to charge locally from the US customers without incurring any fees. So these are a couple of concerns from like the wire transfer side, how inconvenient it is for customers to pay, and how he doesn't have access to US payment gateways. Because Indian banks do not really collaborate well with US payment gateways. There are a couple like PayPal and all of that stuff, but again, they charge huge amounts of money for any transaction that he's going to receive in US dollars from India. And then another big concern that he's going to face when he's doing this is the business reputation. Not a lot of people from the US are comfortable engaging in a transaction with a foreign entity. So US employers and US clients, they might be a little, they might feel a little hesitant in engaging in a contract with Adi because he has an Indian firm, Indian address, Indian citizen. So they might not feel secure engaging in a contract with him or wiring money to India every single time. So these are a couple of concerns that Adi is going to face, when he will start expanding business in the US market. And these are a couple of real concerns. Like, our clients, they've faced this, and this is the reason why we're doing this presentation today as well, because all of these problems are some of the real problems that are faced by Indian businesses who are trying to expand their business in the US market. So this is the reason why we're here, and now we'll discuss like what are the solutions for this. Before that, Adi is not the only person who's gonna face these problems. Anyone who is a manufacturer or an exporter from India who has clients in the US is probably facing the same thing. Even they need to collect payments from US customers. Even they need to sign contracts with US clients or US companies. So there's manufacturers, exporters, and in today's world, we have e-commerce and drop shippers, people who are literally sitting in home, sourcing products from other countries and selling them on Amazon, or just sourcing them from like countries where they can find cheaper products and then selling them with a margin in the US. So even for them, this is a good opportunity for them to open a company there and have their US banks and US companies get connected to the local payment gateway so they can start receiving all the money there. Consultants and freelancers, Adi is a big example of that. So the case study that we're discussing, he is a consultant and a freelancer, or anyone who's providing services on their own. And then we also have IT services and software as a service businesses, and they'll probably face the exact same thing or the exact same problem. So right now, this is the structure we have. Adi, who is an Indian citizen resident providing services from India. And we're going to go into having him open a US company. So in the US, we have US CCorps, US LLCs. So from the existing structure, we're going to focus on how he can benefit from opening a US company. So Adi will basically open a US company, and then he will have his US company provide all the services to the US clients, and he can do all of that sitting in India. We've already discussed the problems, but I'm going to quickly explain you what the benefits of this are, and then we'll dive into like the taxation part and also the company formation part. So a couple of benefits of opening a US company is, first of all, you'll get a US bank account. That eliminates half of your problem. No wire transfer fees, no exchange fees, no conversion fees. You can basically ask for all the payments locally from the US clients, right? So once you have a US bank account, you can connect that US bank account to a US payment gateway, which is basically like Stripe, PayPal, the US ones, which basically charge very minimal fees. Just like how, in India, you have Razorpay. Similarly, in the US, they have Stripe. And, in case you want to start accepting credit cards and all of that in your US bank account. So you can integrate US payment gateways, makes it easier for your US clients to pay you. So now you'll have a US bank account, you can get US payment gateways. The other big thing is you can also get a US virtual address. So this is basically an address that you can use for all the business purposes, banking purposes, mailing purposes, even tax filing and IRS correspondence purposes. And now that you have a US bank account and a US address, you can start advertising your services to US clients as a US company, which means the confidence of the consumers increases. They're more likely to engage in a transaction with you. They're more likely to, sign contracts with you. And the best thing about US company, you don't even need to be a US citizen or a US resident to open a company there. You there's no such requirement to be a US citizen or a US resident. People who do not even have US visas can still open a company there. And that's one of the biggest advantages. Like other countries like Canada, they will still require you to have a local director. But in the US, that's not a case. You can open a C corporation, which is almost like a private limited company in India. You can open that on your own without even having to live in the US. So that's one of the biggest advantages. And this is what I wanted to focus on, that this is how easy it is to do business in the US market. So again, so these are a couple of advantages. Some of the others are, if you open a C Corp there, the tax rates are lower than that in India. You can park your funds in US dollars. You don't need to repatriate everything back into India if you do not want to. If you want to reinvest all of that money back into your US company, you can do that by just keeping your funds in the US bank account. So we'll dive into more. We'll dive into more of the tax implications and how we can do that. So, but yeah, the reason why I've spent so much time discussing these problems and solutions is because these are a couple of real concerns, and this is something that Adi is going to benefit, or like your clients are going to benefit if they're engaging in a transaction with any US customers. So now we'll discuss a little bit about the US entity structures and taxation. So like I've already mentioned, there's a lot of entity structures in the US, but the two big ones that we're going to focus on are LLCs, limited liability companies, and the other one is C corporations. So before we dive into the US structures, we'll discuss a little bit about the Indian structures as well. So in India, we have LLPs, we have private limited companies, we have sole proprietorships, we have OPCs. One of the big ones in India is private limited company. So if you open a private limited company in India as a shareholder or a director, the only way I can take money out of that private limited company is either through salaries or through dividends. I mean, we can take loans as well, but the two traditional ways a shareholder can take money out of a private limited company is by taking a salary or by taking a dividend. But Indian private limited company is it's a separate entity on its own. It files its own tax returns. It pays its own taxes, the 25%, like plus whatever the surcharges. So that's basically how private limited companies work in India. C corporations in the US, they're exactly like private limited companies. That's exactly how they work. And the other entity structure that I want to discuss in India is a sole proprietorship, where sole proprietorship, like you register a sole proprietorship, you get a current account for your sole proprietorship, but the sole proprietorship itself doesn't pay any taxes. Like the business structure doesn't, its owners do. Like, so all of that sole proprietorship income, the net profits, gets reported under the business income head of an individual, and the individual pays taxes on the individual slab rates. Right. So those are the two big entity structures in India. And now we'll dive into the US entity structures as well. So first, C corporations, like we've discussed, they're taxed exactly like Indian private limited companies. So C corporations are US resident entities. They are separate legal entities. They have limited liability protection. They pay their own taxes. They file their own returns. And the only way shareholders can take out money is, again, through salaries, through dividends. They can take out loans as well, but the two traditional ways are, again, salaries and dividends. And with a C corporation, you only need one director or shareholder to open a C corporation. Unlike in India, where you need at least two, if I'm not wrong, you need at least two people to open a private limited company in India. In the US, you can open a C corporation with just one director, and that one director doesn't even need to be a US citizen or a US resident. So that's basically how C corps work, exactly like private limited companies in India. And then we have another entity structure called LLCs, limited liability companies. These are this is the new upcoming structures in the US, and a lot of you guys might already have heard of LLCs. But before I go into LLCs, I want to explain you how the US tax structure works. So we have resident entities just like C corporations, and then we have pass-through entities, which are LLCs. So right here, so LLC is a pass-through entity. It is a transparent entity. it itself doesn't pay any taxes, its owners do. So the reason why I explained sole proprietorships before, like sole proprietorships in India, before I explained LLCs, is because to give you an idea of how this works. So LLCs work exactly like a sole proprietorship. You know, the LLC, you register a LLC, you get a LLC's bank account. You do also get a limited liability protection in LLC, but the LLC itself doesn't pay any taxes, its owners do. So if the owner resides in India, if the owner lives in India, if the owner is doing all the services from India, then he will just need to declare all of that income in India. The LLC might not have to pay taxes. And this is how, pass-through entities work. So we have resident entities and we have pass-through entities. Resident entities, they pay their own taxes. Pass-through entities, we do file a tax return, but then they do not pay the taxes, the owners do. So, and in case of partnerships, they're also pass-through entities in the US. How partnerships work is, say, for example, you make income, you have expenses, and then you have $100 of net profit. And then the partnership, and this partnership has two partners, both of them own 50% each. So we will file a partnership return to basically show that this is the income, this is the expenses, this is the net profit. And then in the same partnership return, we'll show that there's two partners. So the income gets allocated amongst whatever share or deed that they've signed in the partnership. And now we're discussing if they are 50% each. So we'll show that how $100 gets split amongst both of those partners. So they'll both get a document each to show that like the $50 that one partner needs to report $50, then the other partner needs to report $50. But the partner itself doesn't pay any taxes, the partnership. And the partners will basically just report that $50 on the personal income tax return and pay taxes on that income. So that's how pass-through entities work. So with the LLC, it's the same thing. You show all of that, and then you show that the owner is basically going to be paying taxes. So that's the difference between resident entities, which are C corporations, and pass-through entities, which are LLCs. I have a little note here which says pass-through entities do not pay any taxes. The income is allocated to the owners, and the owners pay taxes. So that's the difference between C Corps and LLCs. Might be easier to look at a visual example to understand this. So with a resident entity, so say if Adi, who is an Indian citizen, Indian resident, opens a USC corporation and provides services to US customers through the USC corporation, the C Corp will file its own returns. In the US, we have a 21% tax on net profits. This is after they've taken out salaries, all the expenses. And Adi will basically just report any salaries or dividends that he gets from the C Corp, because the C Corp is a US resident entity. Adi will basically just need to declare anything that he brings back to India on his Indian returns, which is basically as a shareholder, he can bring back salaries, dividends, or if he has an Indian entity, he can invoice for the services that he has provided to the US C Corp. So it's almost like the US C Corp is there getting you the clients, and they're outsourcing all of that work to Adi. So he can also invoice directly to the C Corp to show that he's basically providing services from India. So, but he'll only pay taxes on whatever money he decides to keep in the US. So, he'll have profits, expenses, and expenses will include salaries, commissions, advertising expenses, and cost of services. So in case he decides to invoice anything back into India. So that's basically resident entities. And then on the other hand, we have disregarded, pass-through, or like transparent entities. So we can use those terms interchangeably. But as you can see, we now in the other picture, Adi is gonna own a US LLC, and then the US LLC is providing services. But then eventually, since this is a pass-through entity, so we have registered the LLC, we've got a LLC's bank account. LLC can get in contracts with the US customers, but then eventually all of that income is going to be reported by Adi on his personal income tax return, which is something that he will file in India. So Adi basically reports all of that income from LLC. From a tax perspective, if you think about it, like Adi was running a sole proprietorship, and now that he's running a US LLC, nothing has changed from a tax perspective. He's still reporting all of that income on his Indian returns. In the US, he doesn't have a tax liability. And this is how they can get away with not paying any taxes in the US. And we'll discuss a little bit more about, about how the taxation would work specifically for these LLCs. But this is the reason why, if Adi is an Indian resident, Indian citizen providing services from India, he doesn't need to pay taxes in the US if he decides to repatriate all of that money back into India. And this is the reason why we would recommend any US LLC for anyone who's providing services from India. So what's the best entity structure for you or for Adi, for anyone who's doing a business from India, export of goods, export of services? So before we discuss like what would be now that we understand what LLCs and how LLCs and CCorps work, we need to determine what would be the best entity structure for Adi. So for Adi, before we dive into like what's the best entity structure, we got to understand two quick little keywords, and one of that is USTB. So this is called United States Trade or Business. So you got to pay taxes in the US if you're engaged in USTB. Quick little example. So imagine a person called John, who is a US citizen, a US resident, is a salaried employee in the US. So he's basically providing services from within the US. So this is a clear-cut example of how or when a person is engaged in United States trade or business. So one of the points on the screen is personal services provided from within the US. So when you're a US citizen, US resident living in the US, you got to pay taxes in the US. When is USTB not really clear-cut? It's when foreign people or people from India or people from India who are engaged in US business or who are doing export of goods and export of services, when they start engaging in business in the US, this is when this entire thing is a little questionable. So when exactly is an Indian business engaged in USTB? So we got to look at quantitative and qualitative nature of transactions. So in the US, everything works on a facts and circumstances basis. So if you live in, if you don't really have a physical presence there, you don't really have a USTB. But so one of the points on the screen is what's not USTB. So just having a bank account there does not trigger USTB, because if you look at Adi, for example, who's going to be providing all the services from India, he lives in India, he resides in India, and he's providing services from India. So according to the facts and circumstances, his physical presence is in India. So just having a virtual bank account in the US, that doesn't trigger USTB. He might get a US LLC and a US virtual address for his US LLC, a US local address. But even that address is a virtual address. His physical address is still in India, right? So so this is the reason why just having a virtual address does not also trigger a USTB. So this entire thing is based on like the US common law. So another quick example is even if Adi do hire a US employee, that might not even still trigger a USTB, depending on what kind of work the person is doing there. Because having an employee there could trigger physical establishment there in the US, but it really depends on what the work that US person is doing. Is he really helping you boost your sales? If he's not, if he's just doing some admin work, if he's an accountant, if Adi hired, someone to do his admin work, that doesn't really trigger a USTB. So unless you have USTB, you're not really required to pay taxes in the US. And the other thing that we wanted to discuss was ECI, which is basically if your income is sourced from the US or effectively connected income to the US. So if you have US sourced income, which is basically compensation for personal services, the example that we just discussed, John, who's a US citizen, US resident, living in the US, does services in the US, pays taxes in the US. So when you have a US sourced income, you got to pay taxes there. So if you're going to be having commissions, interest, anything that's sourced to the US, you got to pay taxes on that income. And then we have foreign sourced income. And one of the biggest examples is services provided from outside the US. So Adi, for example, he's providing services from outside the US. He does not have USTB or ECI because all of that income is going to be sourced to India. It's going to be foreign sourced income. And this is how you do not even need to pay taxes there. So now, when would we suggest a C corporation? If the person is gonna have a physical presence in the US, say in the future, Adi's gonna have an office there, a warehouse there, a physical establishment there, then he will need to pay taxes there, right? So at that point, we need to, the best thing would be to open a C corporation. So it's just because the USC corporation is a US resident entity, it pays its own taxes there. So anyone who wants to just reinvest all the profits back into the US company, they want to expand the business in the US, they do not want to declare all of that US company's income in India. I mean, they will still have to report salaries and dividends that they bring back to India, or anything that they invoice from the Indian entity to the US entity. All of that is going to be like income in India. But if they don't want to report everything that's happening in the US in India, then the best thing would be USC corporation, because you only got to declare salaries and dividends, and anything that you bring back to India. You pay taxes on whatever profits you keep there in the US. And that's how easy it is with the C Corp. It's literally just like a private limited company. So think about that, but from a US perspective. And then we have LLCs, so pass-through entities. So LLCs usually work really well for people who are going to be providing services completely from India. They reside in India, they live in India, they have physical establishment in India. They're not going to have any warehouse office agents in the US, and they want to bring all of that profit back to India. So when that's the case, and they don't want to pay any taxes there, because I mean, they might be closer to their family here, they never want to move to the US. So when they know that they want to repatriate everything back into India, and they don't want to pay any taxes there, and if they're only providing services, then they could also consider opening a LLC there, because like we've discussed, it's a pass-through entity, it doesn't pay any taxes, its owners do. So so that being said, discussing Adi's example, this is a quick little screenshot from the US-India tax treaty. So this is where Adi, who's providing independent personal services. So this treaty says that anyone who is a resident of a contracting state, so Adi, who is a resident of India, performs in other contracting state, which is the US, any professional services. So if Adi, who's a resident of India, provides any services in the US from India, he shall be taxable only in the first mentioned state, which is basically India. So even our US-India tax treaty, or DTAA, gives us this clarification on how they'll be taxed if they're not paying any taxes in the US, and if they're paying if they're opening a LLC, and if they repatriate all of the profits back into India, they're going to be basically taxed in India. So basically personal services are taxed from where they're rendered from. So again, where you live, where you provide services from, you got to pay taxes there. So our final case study analysis, we've already discussed this. So in Adi's situation, he doesn't really want to move to the US. He wants to bring all the profits back. He doesn't want to pay any taxes in the US. He just needs to get a US bank account, and he only wants to make life easier for his US clients, because he is gonna get payments, so he doesn't want to make it inconvenient for his US customers to pay him. He wants to increase that confidence. So that's the only reason why he's opening a US company. It's because to make life easier for himself, for US clients to be able to get more contracts because of the confidence of the consumers. So in that case, Adi's providing services from India. Again, so we have already discussed the facts. And because he doesn't have any physical establishment in the US, he doesn't have USTB, he doesn't have US ECI. So he's not, according to the US laws, he's not engaged in business in the US. He doesn't have US sourced income, because all of that income is actually sourced to India. He's basically providing services from India. So he doesn't need to pay any taxes there, but he does have a tax filing requirement. So tax filing doesn't really mean tax paying obligation. So he will have to file a return in the US for his US LLC to show that all of the services are actually being conducted from India. And this is the reason why he's not paying any taxes in the US. So a couple of forms that we have to file: 1120 pro forma and 5472. So any one of you who are doing work in the US, you might be familiar with these particular forms. So what happens when there's more than one owner? So we've already discussed how Adi can open a LLC or a C corporation. So in India, when we have, if the shareholders increase in a private limited company, the taxation of private limited company doesn't really change. I mean, we have just one more shareholder that we need to pay salary to. We have one more shareholder that we need to pay dividends to. But other than that, the taxation from an Indian like private limited company doesn't change. So that's exactly how C corporations work. So if you add one more shareholder, the only thing that's going to change is maybe you pay that person like another salary, more dividends, but like the crux of it remains the same. So with the LLC, something changes, and that's what we're going to discuss. So, but before that, we've already discussed C Corp is a US resident entity. It pays its own taxes, 21%, files Form 1120. And then LLC, that's a single member LLC, which was Adi in our case, is a pass-through entity. We file those forms, 1120 pro forma, 5472 in the US, and then the owner pays the taxes and they report all of that income under in India. And but once we have more than a member in a LLC, the default classification of LLC changes to a partnership. So when we have a multi-member LLC, when we have more than one person LLC, that converts, the LLC is actually treated like a partnership. And if you remember, we've already discussed how partnerships work, which is basically partnerships are actually flow-through entities. And so say the partnership has $100 profit, there's two partners, 50% each. So partnership will file a return to show how all of that income is allocated to the two partners. And then the partners got to pay taxes on their individual returns. So even with the partnership, they might not even have to pay taxes in the US if all they're doing is providing personal services from India. So, but LLC is one of the most flexible structures, as you can see. Single member LLC, multi-member LLC is treated like a partnership. And now we also have the option to convert the LLC to a C corporation. So this is done by filing a couple of extra forms. But in case, say, Adi in the future decides to have, employees there, offices there, warehouses in the US, or like starts engaging in USTB in the US. So he might actually consider converting his company to a C corporation. And then, we can just make that election. And, this is the reason why LLCs are some of the most flexible structures. So you might be thinking, okay, so Adi is doing a business from India. And why do we need to really open a US company when he can open an Indian private limited company? Well, we've already discussed scenario one. The scenario two is where basically Adi owns an Indian private limited company, and the Indian private limited company provides services to the US. The concerns are exactly the same. Even for an Indian private limited company, if the initial problems which we were discussing is, the Indian private limited company is not going to have a US bank account. It's not going to be connecting to US payment gateways. Again, the US it's going to be still inconvenient for the US customers to pay in Adi. And when it comes to securing contracts, US employers might not want to engage in a transaction with a foreign entity, which is the Indian private limited company. So in scenario two, it's exactly the same thing. The concerns are the same, the problems are the same. And even with that, we have a solution. What we can do is basically have Adi, who owns the Indian private limited company. We can just have the Indian private limited company open a US C Corp or a US LLC. So again, it's basically the same solution. It's just we have added one more entity, but then the benefits of doing that is, Adi gets access to the US market, his growth in the US, it increases exponentially. So this is the reason why, anyone who's doing business from India, who's doing export of goods, export of services, should consider opening a company in the US. And now we'll basically discuss the US company formation process. So congrats, now that you understand US C Corps, LLCs, the next step is determining how easy it is to open a company there. So, it works almost like how it works in India. In India, if I want to open a company in India, say a private limited company, LLP, the first thing I do is I go to a chartered accountant, people like you who are specialists in Indian taxation. Similarly, in the US, if you want to open a company in the US, consult with a expert, consult with a CPA, or an EA, which is an enrolled agent, or someone who knows about US structures and someone who knows about international taxation, especially because you're going to be doing all of the work from India. So this is something that you need to keep in mind. So consult with a tax professional, because like we've just discussed, there's a couple of scenarios. There's you can open a CCorp, LLC, depending on if you want to repatriate your profits back into India, keep your profits there. The answer could change. The answer for if you should open a LLC or a CCorp could change. In the US, we have different states of formation where a person can form the company. There are a couple of states like Delaware, Wyoming. These are a couple of states which are non-resident tax friendly. So which means Wyoming, for example, it doesn't have state taxes, it doesn't have corporate income taxes, it doesn't have excise taxes. So it takes the state tax portion completely out if we open a company in Wyoming, and we only need to worry about federal taxes. So that's a really good thing. So again, there's 50 states in the US, and after talking to a specialist, you can determine what would be the best state for your company, what would be the best state of incorporation where you don't have to pay taxes, or your tax liability would be minimum. So that's the reason why you should consult someone to determine what would be the best state of formation. The next step would be to discuss like any tax planning or tax saving strategies. And once you've determined what state you want to incorporate in, the next step would be to file all the paperwork. So hopefully that person you consulted with can help you file all the legal paperwork with the state. So in this case, for example, us, I am a US CPA, I provide company formation services. And after consulting like my clients, we determine like what would be the best state of incorporation. And then we also discuss if they need a US business address or a US virtual address. Because essentially, like, for example, Adi, who's opening a company in the US, he might want to get a US address because that way he can start advertising his services in the US under his company and show like that he has a US presence, even though that's virtual, but he can still do that. So we can determine if he needs a virtual address, a registered agent services, or a registered office there. So once we do that, we can then file all the legal paperwork with the state. So it usually takes about 5 to 7 days for the state to approve all of that paperwork. And, we provide the articles of incorporation, operating agreements, statement of the organizers. Since we are the organizer, we provide you statements saying that, these are the initial directors, these are the initial members of the LLC. And once you have all of that legal paperwork, just like in India, how once you have your legal paperwork for your entity, the next thing that you do is apply for an Indian PAN, right? So in the US, after you have the legal paperwork from the state, the next step would be to get the EIN number. So this is basically the federal tax identification number. And this is basic in the US, we call it EIN. So as a CPA, once we get the paperwork approved from the state, the next steps are to apply for this EIN number with the IRS. So it usually takes about 30 to 45 days, but recently, we've been getting all the EINs in about 2 to 3 weeks. So it's been really quick. This time frame can actually increase when the US tax filing season comes, which is basically from Jan through April. This is because when IRS is super busy. So, that's when it usually takes, 45 days, which is like the upper end. But yeah, it usually takes about, right now, it's only taking about 2 to 3 weeks for us to get the EIN numbers. And after we get the EIN, the client is all ready to open a US bank account. And there are tons of options for US clients. A lot of our clients, they use Mercury. This is a virtual bank in the US, but you can open that while sitting in India. You don't even need to have a US visa. All you need to have is the company paperwork, the EIN number, and your passport. And just on that basis, Mercury can provide you with a bank account, and there's no charges to open a US bank account from India. And once you have your US bank account, you're basically all set to start operating your business in the US from India. So there's a couple of things that you gotta keep in mind, which are like the annual compliances. So you gotta file taxes every year for a C corporation. That's a resident entity. You gotta pay taxes there. But for a LLC, you just gotta file some taxes and report that all of that income is actually sourced to India. So we have tax filing needs. Every year we just need to renew the company. So those renewal charges can differ based on the state of incorporation. For example, California, they charge like a huge amount of money to renew the company every year, whereas Wyoming, Delaware, these are a couple of states which again are non-resident tax friendly, and also the compliance is so much easier. If you're taking any additional services like business address, virtual addresses, registered agent services, so you just got to renew that on a yearly basis, and then bookkeeping. So just like how these are a couple of things that you got to do, even for an Indian firm, this is similar for a US company as well. And now this is a topic that you guys are experts in. So maybe after the session, if someone wants to contribute a little bit into this, if someone you might know a little bit more about this. So I'm hoping to hear the Indian tax consequences and FEMA compliances from you guys, but I'll just quickly cover what the basic requirements are if an Indian person opens a company in the US. So couple of things from an Indian taxation perspective. Again, if it's a LLC, you got to declare all that income in India under your business income head. So you report all of that foreign income in India. If it's a C corporation, you got to only declare what you bring back to India. So you got to declare any salaries, dividends that you bring back to India. So that is basically when you open a C corp there. There are requirements for you to, if you're a shareholder in a US company, then you got to report that on your Indian tax return. You have to also report like any related party transactions, the GST compliances. If you're doing any export of goods and services, you still got to do it, but now you're just going to do it like between your two companies. And you have to, there's TPE requirements, transfer pricing reports, and now we also have FATCA requirements. This is also something that we have to do in the US. But like from an Indian perspective, as an Indian resident who has a US bank account, now you got to report those US bank accounts on your Indian returns as well. So that's basically the Indian taxation. And then we also have the Indian FEMA compliances. So there's this approval process, but 99% of the cases you do not need an approval. You fall under the automatic approval route. RBI sometimes needs an approval, but those are for very restricted entities. For example, like a financial institution, they are, I can't think of other industries on top of my head, but there are a couple of very restricted entities for which you will need a RBI approval, but 99% of the cases, if you're doing any other export services, you do not need an approval from the RBI. You can just go ahead and open a company in the US. And there are ODI compliances. So for example, you pay $500, $600 to open a company in the US. So all of that is, initial capital investment. And for this, you will need to do ODI compliances. There might be FDI compliances, and then, FLA returns as well. So these are a couple of compliances that increase on the Indian side. But again, you got to keep in mind the actual benefit. These compliances might sound a lot on the Indian side, but like the benefit of having a US company or a US C Corp is, your clients you can grow exponentially. The growth that you were going to have by not having a US company, which was like if you were gonna go from 0 customers to 1,000 customers in a year, now you can achieve the same growth from 0 to 1,000 in literally half that time, because it's just easier to do business in the US from a US company. You can sign contracts, the customer confidence increases. Again, I'm saying all of these things again and again, just because this is something that our clients and people have realized. By opening a company in the US, it becomes so much easier to do business there. You might have heard of POEM as well. So this is something which basically says that if the real control and management of the affairs are in India, then you got to pay taxes in India. But then, Circular 8 also said that if the gross receipts are less than 50 crores, then the poem doesn't really apply. But yeah, this for a US resident entity, this might still not apply because it's a US entity. It does all the operations there. It pays all the taxes there. This might be a little concern about for LLCs because all of that services are actually being conducted from India. But again, if it's not under, it's not over 50 crores, then the poem won't really apply. These are like the two screenshots from those poem circulars, which basically the first circular, which is circular number 6 from 2017, basically says place of effective management is defined in the act to mean where key management and commercial decisions are basic, where these decisions are basically made. And then I think a month later, they came out and they said that any company who has a turnover of less than 50 crores, that won't really affect or trigger poem. So, and I mean, well, we want our clients to grow. So in case when they do have like revenues over 50 crores, at that point, they're already thinking about having a physical establishment in the US. They will probably have like a US director. They will probably have any office or warehouse there. So it's really easy to bypass this because you will actually have a US presence. You will actually have a US physical establishment or an office there. So at that point, the poem still won't trigger. So this might be a little concern for you guys, but yeah, according to how things are working with the CCorp or LLC, this hasn't usually been triggered. So it's probably all going to be good. And that was basically it. I'm just going to quickly tell you a little bit more about myself, about the firm, like what we do. So I'm a CPA and I'm the managing director of USA Tax Gurus. And we offer these company formation services. So everything that we just discussed. So, filing all the paperwork with the state, representing you in front of the IRS or your clients, and, getting you the US virtual address, US registered office address. So we provide all of those services. We also do, US taxation. So, all the forms that we discussed for, all those companies, CCorps, LLCs that we form there. We also do their taxation and then also their bookkeeping. A lot of my clients are actually based in the US. So, now I'm actually focusing on helping the Indian companies to expand in the US market, just because I've realized how easy it is to do business there, and people from India can actually use this knowledge, can use this information to open a company there and expand their businesses exponentially in the US. Other than that, like we also do like filings for NRIs, people who were at one point in India but now are living in the US. So I deal only with the US stuff. So if they need help filing a US return, because as a US resident, like they were a Indian resident before, but then now they've moved to the US, or Adi, for example, in the future, he moves to the US, he will become a US resident. So at that point, he will need to declare everything that's going on in India. So, we file NRI returns as well, people who've moved from India to the US. And they had any mutual funds here, any investments here. So anything of that sort, like we do NRI returns as well. So again, this is my team. You've already heard a lot about me. This is Nishchay. He is our tax go-to person, our tax director. And he's based out of Miami, Florida. And, he deals with our practice there. And then we also have Liz. She's a bookkeeping specialist and our business consultant, and she's based out of Colorado, Denver, Colorado. And, she deals with, onboarding our clients, dealing with our US clients. So this is our small little team. And yeah, that's basically me. And I thank you so much for giving me your time. I hope this information was useful to you. And now we can dive into the question and answer session.
Thank you. Thank you, Ajay. Thank you for a wonderful presentation given on this topic. I really appreciate, and all the queries which you have answered, which were discussed in this topic were wonderful explained.
Thank you.
I hope that the members, most of the doubts which normally arise in the mind of the people when they think about US entities and the taxation requirement for those entities are general inquiries about that thing is addressed in this session. And now I would request, with the permission of Upkar sir, sir, we can ask the members for
Yes, a
the,
question answer session.
yes, yes, you can ask for the queries, sir. So I request if anyone is having a query about any of the thing which we have discussed in today's session, so he can write it in the chat box. So you can request them.
Yeah, and if they have any questions regarding even like the Indian part, US part, yeah, just we'll be happy to make this a collaborative event now, and let's have more people participate. So anything is welcome.
Yeah, can I go first?
Yes, yes.
Yeah, you can start, Mohiji.
So Akhil, splendid session. Thank you. Very wide, in-depth coverage of both the geographies.
Thank you.
Thank you for reorienting us with the Indian tax and legal regime.
Yeah.
It was a good revision for us. At that same time, a lot of insight into the US. I do appreciate that this is mostly for Indians working with the US, kind of export.
Exactly.
Do you also, see things working the other way around, where a US market person were to work with India? I mean, in terms of imports.
Yeah, if so, you're saying if a US resident or a US company wants to
Do
work
business with, yes.
in India. Yeah, I mean, for that, I mean, for the US, that will be an outbound transaction, and for India, it will be an inbound transaction. Exactly. So, and from an Indian side, you guys are the experts. Like from the US side, yes, they will have requirements to do filings in the US. So whenever a US person or a US company opens anything in India, if they open a private limited company or any subsidiary in India, they will have to report all of that in the US as well. So there's a technical term, we call it CFCs, controlled foreign corporations. This is for a US person or a US entity who owns a company outside the US. So for that particular company will be considered a CFC, a controlled foreign corporation. And we do have to report everything that's going on even in the US. But my primary focus is on the inbound side of the US. And Nishchay, the person I just introduced, he deals with a lot of beat, guilty, outbound US tax stuff. So, but yeah, we do cover like everything from both the US outbound side and the inbound side. It's just I chose my specialization as inbound because I do want to be here. So trying to help people from here. So just like how since you deal with this, that people who are in the US, they have to file forms 5471s when they open companies in India. But in India, when an Indian person opens a company in the US, we only got to file 5472s, which is basically to show like any related party transactions. But yeah, we do cover that, and I do have a little bit experience working with outbound transactions as well.
And maybe I would have missed that part. I was driving in between. Do you see branch as a concept which can be usable? I understand branch offices have a major tax disadvantage, but have you seen experiences where people prefer to continue with their original company and have a branch office in the other location?
Are you talking about people in India who want to open branch offices there, or the other way around?
Yes, Indian companies having a branch office set up overseas in the US.
They can, and this is where we just got to be a little careful about how to structure that particular entity structure and the transactions, because as an Indian resident, they do have the option to open a US company as a sole shareholder or as multiple shareholders. So usually how branches and subsidiaries work are like if an Indian company opens a US company and that is going to have like US sourced income, that's when the branch profit taxes trigger. So, but in Canada and other countries, you do need local residents in those countries to open a company there. But in the US, you don't really need to do that, which means an Indian shareholder which has interest in the Indian entity can also open a US company like under his name rather than opening a branch office through his Indian entity. So that's another thing that
I see.
where there's a flexibility, because you don't need a US visa. You don't need to be a US citizen to open a company there. So that, and then only the transactions that are going to happen between US company and the Indian company needs to be reported as a related party transaction. That's something that goes on the 5472 forms. But that's another way you can not have like branch profit taxes triggered.
Sure, thank you. Appreciate that. And lastly, one more question. In a long-term perspective, how much do you see technology coming in and providing these kind of solutions in the times ahead?
What kind of solutions?
In the sense that assisting in exports or these tax nuances that you and I would help people with. Do you see any technology solution trying to address this problem in the for a wider coverage? Because again, as you and I both appreciate, most of these businessmen are very scattered, and it's very difficult to gain traction or to gain business with them.
Yes. Yep. So it's just when people are gonna engage in foreign transactions, they might want to talk to an expert in person rather than talking to a computer, because there's only so much you can feed into the computer. I understand, like there's big data, there's so many things that's going on, and I bet there will be some sort of AI in the future which could on the basis of like the facts that you provide to that machine, it could give you that, okay, the best entity structure for you would be LLC. But then it might not have the capability to guide you in terms of like what happens when they want to switch something. When they say, if today Adi gets a US visa, he wants to travel to the US, he's going to live there for more than 6 months. Well, now he'll be a resident, so that could trigger US taxes. So it's a complicated field for basic things. Yes, there are technologies out there. People are opening companies, and there's this legal Zoom. There's all these different services that you can use to open companies in the US. But then they're not going to be the ones telling you that, hey, what's the best entity structure for you? You're going to be the ones telling them that, hey, I want to open an LLC, and they'll just form it for you. They might not even have CPAs, EAs, or tax specialists to guide you for that. So I think for basic requirements, yes, there are technologies out there who are working to cater to the mass audience. And but I think as your business grows and you want to discuss different scenarios, there's only so many scenarios that AI would be able to.
Which can't be customized or tailor-made solutions.
Exactly. And especially with Indian clients, they usually have tons of scenarios to run before they make a decision. And this is something that I appreciate. And, I love answering all their questions. So yeah, it's just like, bring it on, ask all your questions, get those clarifications, ask those questions to your Indian CAs, ask those questions to your Indian CPA. Once you are all set, once you're satisfied with your answers, only then go ahead and open or do transactions there.
Got it.
Yeah.
Thanks. Really appreciate your inputs. Sauravji, Upkarji, if anyone else has questions.
I have a query also. Can you guide us, like in India, we have a mandatory audit requirement for all companies. Filing of returns also. So is it the same way in US also? Like, is it mandatory to get the accounts audited every year, or is there any threshold limit for getting the accounts audited?
Yeah, we don't need to get them all audited. Again, there is a limit there as well, but that's in the millions of dollars. Again, I'm not an auditing specialist, but I know that it's I think over like $250 million or $500 million. That's like they have a bigger threshold. So it's just when they if it's a bigger firm, they will definitely need to get audited. But for smaller firms, and especially with the US, the purchasing power is huge. So that threshold that just automatically increases to a big number. So they do have auditing requirements there, but not for smaller firms.
For smaller businessmen, there is no need to get the accounts audited.
Exactly. So you just got to file taxes with the IRS. If IRS needs more information, they'll reach out to us or the taxpayer, and then we just provide them more information. So for example, like, with transfer pricing, there might be related party transactions. So it's on the taxpayer to keep, all the expenses, receipts, invoices on record, because at the end of the day, taxpayer is responsible for substantiating their position, for showing that this is they have all the documents to prove that this is what happened. And as long as they have that, that's not a problem.
Fine, thank you so much.
Yeah.
So, moving forward, Tarsar, now we can request if anyone in the audience wants to ask any of the questions, you can raise his hand or you can type in the chat box.
Yes,
You can wait for 2 minutes, sir, for raising.
I think there is no questions in chat box.
Till yet there is no query in the chat box. So, wait for 1 or 2 minutes, sir, with your permission, so that if any of the queries.
Yeah, while we're waiting, I think, since I've been in India, I've been getting a couple of questions regarding how to do CPA from India.
Yeah.
And
I want to hear about that.
yeah, I've heard a couple of questions. So while we wait for more questions, I guess I can ask a question myself and answer it. But yeah, people are, even chartered accountants who are well established in India, they want to expand their services and cater to US clients. So there are people who are wondering how to do US CPA from India, and they can absolutely do that. So they have US CPA exams also happen in India, and you can use your Indian education towards registering yourself as a US CPA as well. So if you've done your bachelor's, you get 90 credits. That's equivalent to 90 credits in the US. And then if you've done your master's and if you've done your CA inter, that basically counts towards the total 120 credit requirement that is required to sit for a US CPA exam. So usually people are students who are in India, or people who are chartered accountant professionals, they usually meet this threshold to sit for those CPA exams. And they can register themselves to sit for those CPA exams in India. So Indian education definitely counts towards it. So first thing you got to look at is the education requirements. The second thing is clearing those exams. So there are 4 CPA exams in the US, and all of those are happening in India as well. One is financial accounting and reporting, one is taxation, one is auditing, and the other one is BEC, which is business, economics, IT. So these 4 exams need to be cleared in a window of 18 months. And once you've done that, then the next thing would be getting your experience. So different states have different requirements, but on average, if you have 1 year worth of experience working under a CPA, then you basically met all the requirements. So education, your exams, and then the work experience. So once you have these 3 things, you can get a US CPA license, and then you can also practice as a CPA, represent clients in front of the IRS. But yeah, even that is possible from India.
Akhilji, tell me, if I want to start some outsourcing business, what precaution I have to take before that?
If you, as a Indian chartered accountant,
and I have some tie-up with some CPA or some other person local there.
Yes.
So what precautions I have to take?
Nothing. I mean, like we just discussed, you're in the same case as Adi, you're providing services from India, right? So first of all, I mean, if they're comfortable sending you all of that work to India, you're good. So the second thing that you got to think about is, now, do you want to engage in a contract with that US CPA or US firms from your Indian company or the Indian, firm that you've made, or you want to open a US company? And say, for example, in the future, you're planning to do a lot of outsourcing work in India. And so you're going to have a lot of transactions from the US customers or US clients or US other CPAs who are going to associate with you. So at that point, you might consider opening a US company because, again, with all the benefits that we just realized. And like we know, services are basically taxed from where they're rendered from. So if basically you're providing all of those services from India, you now have an option to either open a C Corp or a LLC. And with a C Corp, you can just pay taxes there, or with the LLC, you can just pay all the taxes in India. So it just depends on, what kind of entity structure would work the best for you. But if you want to open a US company, you can do that with just sitting in India, and you can receive all your payments from your US CPAs or US clients in your US company, and then you can repatriate it back into India. But there's no really approval, you won't need any approval process from like RBI or anything of that sort. And all of this could be done in literally a month. So all the way from setting up a company to getting you a bank account, everything can be done in a month. And at that point, you can just start engaging in transactions there.
Thank you, Akhilji. And one query I have also. So, like you said, that if we open a LLC over there in US, and we repatriate some profits from US to India, so we need to pay taxes only in India because LLC are exempt not to pay taxes in US. When we are bringing the profits back to India, so we need to pay taxes only here in India only. So do we need to pay the federal taxes to while filing our individual return, or do we need to pay the taxes to the Indian government only? So how it works like?
Yeah. So for people like yourself, anyone who's providing services, we've discussed personal services are taxed from where they're rendered from. And we've discussed that LLCs are almost taxed like how Indian sole proprietorships are taxed. LLCs itself, they do not pay any taxes, their owners do. And then those taxes were determined by if you have USTB or ECI, basically any US sourced income. But if like I said, it's based on facts and circumstances. So if you're based in India, you're going to do all the work in India, you got to pay taxes in India. So like in a sole proprietorship, you have a current account, right? So from that current account, it doesn't matter if you take a salary or not, you still got to report all of that income on your individual return. Similarly, with the LLC, if you repatriate anything back into India or not, that income still needs to be reported on your Indian returns. So say if the income is $100, you take $50 as profit, and then you do not repatriate that $50. Obviously, that $50 is going to be reported under your salary head because that's your international company's director's salary, right? So all of that is going to be reported as a salary income, that $50. And the other $50, which is the remaining net profit of that company, is also going to be reported in India because we are basically filing a tax return in the US to show that all of these activities are actually done in India. This business or this LLC does not have USTB. This LLC does not have ECI. Hence, all of this income is not taxable in the US, and we are paying our appropriate taxes in India. Exactly. So that's the benefit of LLCs. But then for some people who do not want to repatriate everything back into India, do not want to declare all of that income in India, they might consider C corporations because those are US resident entities. So at that point, only the $50 that you brought back as salary needs to be declared in India as salary income. And the remaining $50 that are left in the US under a C corporation, they got to pay 21% taxes in the US. And in future, if you do want to bring it back, you can again bring it back as a salary or dividends, or you can take a loan, or you can invoice from the Indian entity. So you have all the options.
Sir, I think most of the queries are answered.
Yes, we can conclude, sir.
So we can conclude. So,
yeah.
Akhilji, a heartfelt thanks to you, sir.
We will share the YouTube link with all of our members. Those who could not join.
Perfect.
We'll surely share, sir. Akhilji, heartfelt thanks to you, sir, for sparing out all the time and joining us with this wonderful session. And we look forward to see you soon, sir. Again on the same platform with our branch. We request you to keep associated with us and keep sharing this knowledgeable session.
It was a pleasure to be here to share all of this information, you guys. And with the YouTube link, if you want to share any of my information with your members, if they have any queries in the future, I'm approachable. So just feel free to reach out to me. I'll be happy to work with you guys to help any of your clients. And if you want to have a discussion regarding anything, just reach out to me.
Thank you so much.
Perfect. Thank you, Karji.
Thank you so much, Akhil. Thank you so much.
Thank you. Take care.
हाँ जी भाजी सर सत श्री अकाल की हाल चाल है बोलो 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 सर